11:02 a.m. Pacific Standard Time. Today's date 12/18/2011. Here on the screen with MMT's live on Sunday, we're going to go into Merry Christmas to everyone and a Merry Christmas trading week to everyone, public and MMTs. So, and our worldwide people, international visitors, is that one of the things that we're going to talk about is how to set yourself up for using the EMini Futures March 12th contract. It's a weekly chart. You're closing below the 10-week moving average in these futures. And basically, this is that area that was on the futures down here, just like on the index. The problem is that right now, as we had clearly said, the 50-week moving average is a primary resistance level. The 10-week moving average is very, 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 very important here, because as we go in and start our new calendar year, we're going to take a look at that blue line. That's this one, 10-week MMT. The thing about it is, on that futures market, that 10-week moving average is 1227.45, and the close on the S&P Friday was 1219.96. So you're closing below the 10-week. That's on the futures market. Remember, the future behavior, the common denominator, is between the buyers and the sellers looking forward. The 20-week that's pointing down on this futures contract is not favorable. Now, let's go to the weekly moving average right up here on the S&P 500 index, which we have trend lines and other analysis that are on the website. We came up in that rally here. That was that 4-week rally that we called the top. We reversed that rally and we came back up and tested that pink line as a 50-week moving average at solid resistance. MMTs in the calendar week, look at, it's going to be light trading volume. Today's date is 12/18, so you're going to have the 19th through, which is going to be Monday, and we're going to have that holiday coming up, but the prior week, so we got 2 weeks left. The thing about it is that this 1200 level, I keep talking about it with you, and I'm going to tell you that this 100-week moving average and this 20-week moving average, the red line, that's right here at that weekly trend. That's very, very, very important, because if we sell down through it, well, then our next bottoms over here are going to be back here. This is where we called that reversal. We rallied off of the 1075, went long. We got up here and we started tilting and we got out. Then we had to be short here. This 50-week, both charts on the futures look identical. They got the 50-week moving average here. They got the 10-week. They're both selling off. This one here has a support level, though, of how the market will trade. If we sell through it, then the put options will work, and we can come all the way back down here to this 200-week moving average in this chart right here on the S&P 500 index. That's that green line. So what is that price? Well, that price stands to be at the moment 1134.72, which would undercut those last lows, and that would be our primary support level that we would look between now and year end. Another thing that we would like to say is that if the S&P were to have a bull case now for year end, this weekly bar right here would become a weekly buy signal. We would get up above here, and the upside for the bull case is on light volume is that we come all the way back up here and test some of these areas of around, well, we will tell people we got to clear this weekly bar right here. We got to close above the 50. We got to get a maintained close above there for the last couple weeks to get to these upper end of these resistance levels in here. And this is what it looks like. It looks just like this. We got to take out that high, consolidate there. If we continue to sell down through, then we'll be shorting the market more on an intraday level or a 3-day level or a 5-day level or 7 or 9-day level. We'll be watching the weekly buy and sell signals, standard technical analysis, that bounce off the 100-week. As if we come down and hold it, we'll start buying the call side of the market. And we do have, starting here on 1223, it starts right here. We got the 1190 call put that's out of the money. We got the calls, we got the 1200 call, we got the 1200 put to monitor so that we can trade the last calendar week in the index options and looking further out into January. But we can trade this market during this holiday period that expires on 12/23, contracts on the S&P 500. So we have that in there. There is the daily chart analysis using the weekly analysis MMTs. We will buy calls at support levels. We'll look for the opportunity for the short levels based on the closing bell of the calendar, back half of the calendar year of 2011, and how right we have been with this analysis. Go back to when we called the short at 1370 and said we were going down, and then how many times we called the long off of those lows to sell into resistance. And we continue that any moves that continue to go higher in the bull case, that we will continue to sell in to that strength short and take the other side and make those profits as they have been working. And that risk on trade is not in the market. It's more like the risk off. And once again, using calls and puts and trading the S&P index, which we do all the time. Right here, I would be happy to show you where some of the call contracts got down to. There was 7,800 contracts, the 1250 put for January. Of course, it can go a lot lower if we break above and get back above here. But if we break through these contracts can go up to the neighborhood of $75 a contract real easily, depending on which direction of the market. We traded these things intraday. They were marked down again to 43 and marked back up to the close. That was a $7 move, buying wholesale, selling retail. Yes, understanding weekly charts. Yes, understanding the weekly S&P 500. Yes, understanding how to use an EMini S&P futures and how to trade the volatility.